Hello, and welcome to the CU Anschutz Financial Aid and Scholarships Office presentation for Anesthesiology Assistant Program Fall 2026 matriculation. My name is Audrey Niedfeld. My pronouns are she, her, and I'm a financial aid advisor here in the Financial Aid and Scholarships Office. Today we're going to go into quite a few pieces of information, so we would like you to grab a notepad, grab a pen, grab an iPad, whatever works best for you to take notes. And then also just take this recording as you need. That is why we wanted to present this in this type of format so that you can digest all of this information in whatever format or way or speed works best for you. It is a lot of information, so please bear with me as we get started. Today's presentation will have 3 key takeaways. Key takeaway number 1 is funding types of aid. Our goal with this is to help you understand the different categories of aid, where those aid funds come from, and the requirements to receive those different types of aid. Key takeaway number 2 is understanding the cost of attendance, or the COA. Our goal with this is that you will be able to define and understand the different components that make up the COA, and also understand how COA and financial aid offers interact with one another. Key takeaway number 3 is the Financial Aid and Scholarship Office Student Partnership. There are 2 main goals with this takeaway. The first is understanding how the Financial Aid and Scholarship Office at CU Anschutz, also referred to as FASO, works with students to tailor their aid to their needs. The secondary goal is understanding that FASO must operate within rules and regulations set in place by CU Anschutz, the state of Colorado, and the federal government regarding aid. These rules and regulations may have an impact on what we can offer. Financial aid offices use a lot of terminology that you may not be familiar with. So before we jump into the key takeaways for today's presentation, I wanted to provide some definitions of commonly used words or phrases. The financial aid offer is the amounts and types of aid available to a student during a given aid year. The amounts and types are determined by federal or state aid applications, which we will go over later, and must follow the rules and regulations regarding aid that I mentioned previously. At CU Anschutz, FASO sends out a detailed financial aid offer letter via email each aid year to students who have completed their aid application. The aid or award year is the time frame that aid is intended to fund education for a student. This may not align directly with your academic year that your program follows, so please be mindful when you're reviewing your financial aid offer to see what the aid or award year is. At CU Anschutz, we follow the fall, spring, summer semester aid or award year. The cost of attendance, or COA, is the estimated total that a student would reasonably need for the aid year in their program of study. COA includes costs payable to the school, such as tuition and academic or program fees. These are also referred to as direct or billable costs. The COA also includes costs payable to others, such as rent, food, transportation, personal expenses, healthcare, etc. These are also commonly referred to as indirect or non-billable costs. The COA is the maximum amount of aid that a student can accept for that given aid year. That includes all types of aid, such as scholarships, grants, loans, work study, etc. We will go more in depth into the cost of attendance later on. The Student Aid Index, or SAI, is a number that's used to determine how much need-based aid can be offered. It helps determine eligibility for federal, state, and institutional funding. The SAI number is received by an automatic calculation completed by the federal or state application for aid that a student fills out. Need-based aid is a category of aid that is awarded to students based on their financial situations. That financial situation can include factors such as income, personal assets, and family size. This information is gathered in the federal or state application for aid and helps determine the student's SAI. A student's financial need is determined by a calculation where we take the COA, or cost of attendance, and subtract the SAI, or student aid index. The resulting number is what the student's need is. The higher a student's SAI, the less need that they will have. For example, if a cost of attendance for a student is $15,000 and their SAI is $5,000, their need is calculated at $10,000. Disbursement, or disbursement of funds, is when aid is sent to the bursar's or billing office to be applied to the student's outstanding bill. This occurs at the start of each semester. If there is an overage after the bill has been paid, the aid will be issued to the student as a refund. That can be either direct deposit or paper check. This is also typically issued within the first week of classes, provided all requirements for aid are met. At CU Anschutz, you will receive a paper check by default for any refunds, but you can set up direct deposit with the bursar's office and have the funds automatically put into your bank account. Satisfactory academic progress, or SAP, is a process that schools must use to calculate and determine whether a student is successfully moving towards completion of their degree. This is a federal regulation set in place regarding financial aid and uses the following three measurements: grade point average, or GPA, course completion rate, and maximum time frame. We'll go more in depth into SAP in a little bit. A loan lender is the financial institution providing money to a borrower. A loan servicer is a company that the loan lender will work with to help manage the student loans. The loan servicer is the one responsible for administering the balance of the loan, the repayment options, and collecting payments once the student enters repayment. A loan origination or processing fee is a percentage of the loan principal that is charged by the lender to prepare and oversee the loan. This means that a percentage of the principal that you accept is held back by the loan lender and provided to the loan servicer to oversee the loan during its lifetime. Loan certification is a FASO process of verifying loan details and also the student's school records, including things such as enrollment. Loans can only be certified up to the COA of the semester and must consider all other aid that a student has. Now that we have covered a lot of commonly used financial aid terminology, I also want to touch on the financial aid, or FA basics, before we jump into the key takeaways of today's presentation. What is financial aid and how do I get it? Financial aid is money to help pay for college. It must be used for education-related expenses and is not intended to cover other types of debt, such as credit cards or auto loans. To receive financial aid, a student generally must complete a free application for Federal Student Aid, or FAFSA, for each aid year. There may be additional requirements depending on the type of aid a student is offered. In order for a student to be eligible to complete the FAFSA, they must meet the following requirements. Number one, they must be a U.S. citizen or eligible non-citizen as defined by the Department of Education, or ED. Two, they must not be in default on federal loans or owe any federal grant funds. Three, they must certify that they will use the federal student aid only for educational purposes. And four, they must maintain satisfactory academic progress, or SAP, during their time in school. The FAFSA is an annual application that can be found and completed on studentaid.gov. Typically, this application will become available in October for the upcoming aid year, so that fall, spring, and summer. You want to ensure that you use the appropriate school code so it gets sent to the school that you will be attending. CU Anschutz shares our code with CU Denver, and it is 004508. We do encourage students to apply and complete the FAFSA, even if they feel they will only be eligible for loans, because a lot of scholarships require FAFSA information. Students who are ineligible for completion of the FAFSA and are Colorado residents with asset status should complete the Colorado Application for State Financial Aid, or CASFA. If you have questions about your residency status, please work directly with the registrar's office. The CASFA will help determine your eligibility for state grants and work study funds, and also provide important information for any need-based scholarships. Now that we are familiar with commonly used financial aid terminology and financial aid basics, we're going to jump into the key takeaway number one: funding types. Funding types for financial aid are broken into four main categories: educational loans, grants, scholarships, and work-study funds. Educational loans are a funding type that require repayment with interest. This is financial aid funds that can be borrowed from the federal government, the college or university you are attending, or private sources such as banks or credit unions. Current options for educational loans are the Federal Direct Loan Program and private loans. The first type of educational loan that we will take a look at is the Federal Direct Student Loans in the Federal Direct Student Loan Program. This program allows eligible students to borrow directly from the U.S. Department of Education, or ED, and includes for graduate and professional level students the Federal Direct Unsubsidized Loan. We will talk more in depth about the Federal Direct Unsubsidized Loan in a little bit, but first I would like to take a look at the benefits of the Federal Direct Student Loan Program. Federal direct student loans are eligible for deferment. Deferment is a temporary postponement of payments towards the loan that includes the principal and the interest that has accrued. There are different types of deferment, and they all have specific conditions that must be met. The most common one that you will likely hear about is in-school deferment. This is where a borrower enters a new program of study at an eligible institution and enrolls in a minimum of half-time coursework eligible to their declared program of study. During this time, and while they meet all of those requirements throughout their program, the student will not be required to pay towards the principal or interest of a federal direct student loan. During deferment, the borrower's credit still remains in good standing and no adverse credit items are reported on their credit history. For any prior federal direct subsidized loans, interest will not accrue during deferment. However, any prior federal direct Parent Plus loans will accrue interest, as will any prior or current federal direct unsubsidized loans. If a borrower has any prior federal direct Graduate Plus loans outstanding, interest will also accrue on these loans during the deferment period. Federal direct loans are also eligible for forbearance. This is the ability to temporarily stop making monthly student loan payments or to make smaller monthly payments. During forbearance, all federal loans accumulate interest, including the direct subsidized loans. Borrower's credit does remain in good standing during this time as well. Federal direct student loans are eligible for forgiveness, cancellation, and discharge. These are all removal of the borrower's obligation to repay some or all of a loan. They do have different requirements and are used in different ways, so be sure that you are connecting with your loan servicer to discuss these options. Federal direct student loans have fixed interest rates that are set by the Department of Education. This means that regardless of your credit history, the interest will be the same on a federal student loan for you as it is for everyone else who takes out that loan. It also means that the interest percent will not change during the entire life of the loan from acceptance through repayment. ED sets new interest rates that start each July 1st and end the subsequent June 30th. This means that upon graduation or leaving CU Anschutz, you will likely have multiple different loans with multiple different fixed interest rates. Federal direct student loans also have fixed origination fees. Similar to the interest rate, ED sets new origination fees that start July 1st and end the following June 30th. These loans also have one-time 6-month grace periods per loan before repayment begins. That means that a student or a borrower is not required to pay towards their principal or interest for 6 months after graduation or dropping below half-time enrollment. Federal direct student loans require completion of online entrance counseling and a master promissory note, or MPN. Master implies that the MPN is valid for 10 years, provided the student stays at the same institution during that time. Both of these are completed at studentaid.gov, which is where you also submit your FAFSA. The Federal Direct Student Loan Program is undergoing changes under the One Big Beautiful Bill Act. These changes will go into effect on July 1st, 2026, and the information in these coming slides is the most current guidance available as of January 2026. Information is subject to change, so we recommend that you continue to check our Federal Loans Program Updates website, available at this QR code below. Especially if you are watching this video after it has been recorded and updated, there may be significant changes that are not covered at this time. So again, please be sure to visit our Federal Loans Updates website at this QR code below to review the most current up-to-date information about the One Big Beautiful Bill Act and the Federal Direct Loan Program updates. With the passage of the One Big Beautiful Bill Act, which goes into effect on July 1st, 2026, the Federal Direct Student Loan Program will be undergoing some updates. These are some key highlights of those updates as of January 2026 and current guidance we have received. Please keep in mind that this is subject to change. The Federal Direct Graduate Plus Loan Program will no longer be an option for borrowers after July 1st, 2026. There will also be new federal direct unsubsidized loan annual and aggregate lifetime limits that go into effect on July 1st, 2026. Repayment plans will only include two options, the Standard Repayment Plan and the Repayment Assistance Plan, also known as RAP. Within the One Big Beautiful Bill Act changes, the Federal Direct Student Loan Program is going to have adjustments to the annual limit and aggregate or lifetime limit of the federal direct unsubsidized loan. The annual limit will be $20,500, and when we say annual, we mean the fall, spring, summer aid year. The aggregate or lifetime limit, which is the amount that a student can have borrowed and or owe, is $100,000. Previously, the aggregate limit of the unsubsidized loan included any undergraduate borrowing that a student may have taken out. However, with the Federal Direct Student Loan Program changes, it will no longer include the undergraduate borrowing. So it will be $100,000 for graduate or professional level programs only. Now that we have covered the Federal Direct Student Loan Program and the coming changes under the One Big Beautiful Bill Act, we will look more into private loans. First, we will look at the sources and the purpose of these private loans. A private loan is a loan that is non-federal funds offered by different lenders, such as banks, credit unions, state agencies, etc. Private loans are intended to fill the gap in a student's cost of attendance when their other aid doesn't fully cover their educational costs. Rates and terms of private loans are determined by the lender that is issuing the funds to the borrower. Interest rates and origination fees are determined by the lender as well as the creditworthiness of the borrower and, if applicable, their cosigner. Repayment terms may vary depending on the lender. Some do require repayment while the student is in school, and some offer the ability to release the cosigner if one was added to the loan after a time period of eligible on-time payments. Borrowing requirements for private educational loans include approved credit check for the borrower and, if applicable, the cosigner, that the student is enrolled at least half-time in an eligible program, that there is certification of the loan funds by the university. Many of them do require students to be a U.S. citizen or have permanent resident status. There are some options available for international students, however. The lender may also request proof of income or employment from the student and the cosigner if applicable. A cosigner for a private student loan is usually a parent, guardian, or trusted adult that has a strong credit history and stable income. Cosigners can help students qualify for loans if their credit history or income is lower than preferred. And cosigners may also help students secure better interest rates. This is because having a cosigner on a loan lessens the risk of the loan not being repaid. The lower the risk, the lower the interest rate. We strongly encourage students to carefully consider whether or not they need a cosigner for their private student loan. If it is determined that you need a cosigner, we recommend asking a trusted individual that has a strong credit history and stable income, and you should ensure that the cosigner understands their responsibility. Cosigners are legally obligated to repay the loan if the borrower is not able to for any reason, and some lenders do offer the cosigner release options after a period of on-time payments are made, making them no longer legally obligated to repay the loan. Next, we will look at how the Financial Aid and Scholarships Office interacts with private loans. FASO can certify private loans from any lender, and the certification of the funds can only be up to the student's cost of attendance for their semester minus all other aid that they are receiving. FASO is not able to endorse or recommend any lenders to students. However, our website has tips on finding a lender and preparing to apply. When it comes to private educational loans, the loan periods of that loan cannot cross aid or academic years or overlap them. As a reminder, CU Anschutz follows the fall, spring, summer semester aid year. As an example, let's say that a student takes out a loan with a period of July 1st, 2026 through May 31st, 2027. It is sent to our office after approval for certification, and we notice that this loan period overlaps 2025-2026 aid year and 2026-2027 aid year. This is because it covers a time period of summer 2026, which is part of the 25-26 aid year, as well as fall 2026 and spring 2027, both of which fall under the 26-27 aid year. Unfortunately, regardless of the student's approved status, our office is not able to certify this loan, and therefore the student will not receive the aid. An example of a private educational loan that our office would be able to certify is a loan that has a period of August 1st, 2026 to May 31st, 2027. This time period covers fall 2026 and spring 2027, which are both part of the 2026-2027 aid year. This loan does not overlap or cross academic or aid years. When you start applying for private student loans, it's very important that you understand the loan periods and how our office will handle loans that cover multiple semesters. If a loan period covers multiple semesters within an aid year, our office will automatically divide the amount evenly between the semesters included. You're welcome to contact FASO to discuss a customized distribution of the funds, as we can do that upon request. As an example, we'll say a student took out a $12,000 loan that has a loan period of August 1st, 2026 through May 31st, 2027. After our office confirms that this covers just one aid year, which it does, the 26 to 27 aid year, as it's fall 2026 and spring 2027 semesters, we would do an automatic split of $6,000 dispersed per semester. Let's say that the student decides to contact us for a customized distribution and requests $7,000 for fall semester and $5,000 for spring. Our office can do this so long as the requested amount does not exceed the cost of attendance in either semester included. When it comes to educational loans, we strongly encourage students to consider the following. Make sure that you understand the total borrowing cost over time of the loan that you will be taking out. That includes the principal, the origination fee, as well as the interest that will accrue. You are responsible for paying back each piece of this over the loan's lifetime. We also strongly encourage students to prioritize their federal student loan options first due to the benefits that the federal direct student loan program has. When and if you start considering private student loans, we strongly encourage comparing lenders for rates, fees, and repayment terms before you start applying, and also start thinking about a cosigner if you think that you may need one. Grants are a funding source for students who have documented need. This is typically a state or federal funding source, and they lay out their own requirements for students to be eligible for them. As a graduate or professional level student in the state of Colorado, the only grant that a student may be eligible for is the Colorado Graduate Grant, or CGG. The CGG is funded by the Colorado General Assembly and requires students meet the following requirements. They must be classified as a Colorado resident. They must show need as determined by the FAFSA or CASFA, and they must be enrolled in a minimum of 4 credit hours each semester that they intend to receive the Colorado Graduate Grant. Unfortunately, we have no other grants at this time, state or federal, that are available for graduate or professional level students. The third funding type available to CU Anschutz students is scholarships. Scholarships are a type of aid that require the student to apply, and they are categorized into 2 different options. Internal, which is going to be any scholarship funding from the Colorado School of Medicine or CU Anschutz. And then the second is external. That means a scholarship from any non-CU AMC entity. Criteria for both internal and external scholarships are determined by the funding source or the donor. That includes eligibility requirements, application deadlines, etc. Generally speaking, scholarships do not require any kind of repayment or service from the student, regardless of if they are internal or external scholarships. There may be eligibility requirements such as maintaining a specific GPA, maintaining good SAP standing, such as that, so you want to make sure that you are reviewing the application and funding requirements in detail. Similarly, the award amounts may vary and vary drastically, but all amounts will help. Also, FASO can process scholarship funds from any source. So if you spend an hour working on a scholarship application and you only receive $50, it may not seem like much in the grand scheme of things. However, you did just make $50 for an hour's worth of work, and you're also reducing your borrowing by a not insignificant amount. When it comes to applying for scholarships, especially for external ones, we really encourage students to think broadly. Don't focus just on your program. Think about things that make you unique. Think about sources that may be unique. You could look into your parents' place of worship, your spouse's place of employment, your place of employment or worship. You could look into King Soopers or Sprouts. I've heard that some students who are frequent shoppers are able to get scholarships from them. You can also contact your high school, even if it has been maybe 10 plus years since you graduated high school. The fourth and final funding source available for students at the Anschutz Medical Campus is work study. Work study is a federally funded, need-based type of aid. Eligibility for work study is determined by the FAFSA. It requires part-time employment on the student's behalf, which allows the student to earn financial aid money to help cover educational expenses throughout their semester. Keep in mind that unlike other institutions, CU Anschutz financial aid will not automatically offer students work study. If you wish to receive any kind of work study funding, you will need to complete the work study authorization form on our website. Please also keep in mind that work study is a limited funding source, so CU Anschutz is allotted a certain amount of work study funds per aid year. If you complete a work study authorization form, even if you are eligible for work study funds, you may not receive them. However, we do still encourage completing the form, as you will then be put on a wait list, and once funds are available, you will be notified. That covers key takeaway number 1, funding types. We will now jump into key takeaway number 2, cost of attendance, or COA. The cost of attendance is the best estimate of reasonable costs associated with your program. These costs are determined by CU Anschutz, your academic program, and the Colorado Department of Higher Education. Once we put all of this together, it determines the cost of attendance for each semester within an aid year. Cost of attendance is made up of 2 distinct categories. The first is called costs payable to the school, although you may hear it referred to as billable costs or direct costs. These are any costs that are paid directly to the college or university. It can include anything from tuition to academic and program fees to other expenses that are paid directly to the school for enrollment. The second category of cost of attendance is called costs paid to others. This may also be referred to as unbillable costs or indirect costs. These are any expenses that are associated with the student receiving their education. It does not include anything paid directly to the college or university, so it is anything paid to a third-party entity. This can include things such as books, supplies, health insurance, living expenses, transportation, and many other things. Within the estimated cost of attendance for any student, there are allowances. Allowances are different funding categories, and it sets the maximum amount that a student can reasonably expect to spend during the semester in that category. The first allowance that we will take a look at is the living allowance. Living allowances are adjusted each aid year. The current 2025 to 2026 aid year has an allowance of roughly $2,800 a month. We do anticipate this being very similar for the 2026-2027 aid year. You'll be able to find this information for the living allowance and your cost of attendance for the Anesthesiology Assistant Program through our website and via your financial aid offer likely towards the end of the summer. So please be sure that you're monitoring your CU Anschutz email for that information. The living allowance is set by the Colorado Department of Higher Education and is based on reasonable averages of cost of living within the Denver metro area. The living allowance includes funding for food, such as groceries or dining out. It includes expenses for car-related items such as insurance, maintenance, fuel, basically anything related to a car except the purchase of a new one. It includes funding for personal hygiene, recreation, housing, so rent or mortgage. And then also you can utilize this funding for non-monthly or irregular expenses. For example, you can budget a monthly equivalent of your annual car registration and reserve that in savings to pay off your car registration when it comes due. Living allowance funds are issued as a refund at the beginning of the semester through the bursar's office after disbursement. This means that you will receive the total living allowance funds for the semester, typically the first week of class. We recommend putting that lump sum into a high-yield savings account to ensure that you are accruing good interest, and then schedule your monthly expenses to transfer over to a checking account each month, almost as if you were getting a paycheck. To minimize debt, we strongly encourage you to carefully consider the amount that you need for living expenses. Think about any costs that you can cut, such as rent or mortgage if you do not cover that, insurance if you are on a spouse or parents plan, anything like that. It is your responsibility to budget and to make sure that you are actively using what you need and not borrowing just because it's there. Remember, when it comes to educational loans, you are responsible for repaying the principal, interest, and origination fee once you're done. Cost of attendance information can be found in 3 different spots. Each aid year, our office will upload estimated costs of attendance onto our website for every program. This information can also be found in UCD Access, and we do also include your estimated cost of attendance in your financial aid offer letter. We strongly encourage holding on to those financial aid offer letters no matter when you receive them, just so that you have them for reference. The estimated cost of attendance is set for every student, and we separate them by resident cost of attendance and non-resident cost of attendance. This is regardless of your circumstances. However, there are some circumstances that may qualify for an increase in your cost of attendance. Examples of these circumstances can include childcare, educational, computer and technology purchases, and unusual health costs. Do keep in mind that these funds are typically covered by additional loans rather than other types of aid. If there is something that you are experiencing and you wish to discuss your options, we encourage you to reach out to FASO to discuss what's happening and what we may be able to do to support you. Next, let's take a look at how the cost of attendance and your financial aid offer interact. Initial financial aid offers will include eligible funds from grants and federal student loans, scholarships, private or alternative loans, work study, and other types of aid funds are added as applicable. Anytime that there is an adjustment to your aid offer, we will send you an updated offer email with information about this to your CU Anschutz email account. As I mentioned, I recommend holding on to these so that you have them for reference throughout the semester and in future semesters should you need them. Keep in mind that all federal direct loan offers must be accepted by you in UCD Access if you wish to utilize those funds. Also, our office tends to offer fall semester and spring semester aid together, with the offer split evenly between the two terms. Summer semester will be offered separately if applicable. That means that if you are offered $10,000 in grant funds or federal student loan funds for fall and spring, and you accept that full amount, we will put $5,000 towards the fall disbursement and then $5,000 to the spring disbursement. So please keep that in mind and accept carefully when you're accepting aid in UCD Access. An important federal regulation regarding financial aid and your cost of attendance is that your total aid offer can never exceed your cost of attendance for the term in question. That total aid offer includes every single type of aid that you have been offered or received. Educational loans, both federal and private, work study funds, grants, scholarships, employee assistance, tuition benefits, etc. If at any time your financial aid offer exceeds your cost of attendance, we are legally obligated to reduce your least desirable aid first. Typically, that means we will be reducing the principal of your loan with the highest interest rate, but it does mean that we may have to reduce other types of aid as well, depending on how over the cost of attendance it is. The good news is that if your loan is lowered or reduced through our office, the interest and origination fees on the amount that is reduced will be waived. Keep in mind that this can result in you having to repay funds to the university, especially if you received a refund. On that note, please be sure to monitor your email, your UCD Access to-do list, and your student account with the bursar's office throughout the semester. Even if your bill is covered at the beginning of the semester through financial aid disbursement, please do not assume that your bill remains a $0 balance throughout the semester. Outstanding bills are subject to late fees and service charges, so be sure that you are monitoring that so that you are aware if you do owe any money for any reason. So that you have a better idea of what a cost of attendance will look like, both on our website and via your email, here is an example of the anesthesiology class of 2027's 2025-2026 estimated cost of attendance. This particular slide is for Colorado residents, and it does include tuition per credit hour of $793. The two items at the top, tuition and fees, are those items that are called costs payable to the school. That is what you will likely see on your bill if you don't apply any other charges. Books and supplies, health insurance or health allowance, the living expenses, and loan fees are items that will be costs payable to others. You will likely receive a refund for that amount if you accept up to your full cost of attendance. You can charge bookstore items onto your student account. However, just like the health insurance, you will need to grant permissions for or authorization for financial aid to pay all of your fees. This is because financial aid must pay all mandatory fees, so program or academic fees. And while financial aid can cover what is called optional fees, it does not automatically do so. You as a student have to actively go in and give permission to the bursar's office for them to take out the cost of your books and supplies as charged, and or the health insurance if you're keeping that prior to issuing you a refund. Keep in mind that if you do not grant these permissions, you will likely receive a refund and then still have an outstanding bill. You can see here that the tuition for fall is based off 19 credit hours, for spring it's based off of 22 credit hours, and for summer it's based off 21.5 credit hours. Fall semester also includes a one-time $140 matriculation fee for those first-year, first-time students. Also, please keep in mind that the health insurance allowance or healthcare-related allowance is just an estimate. It may not be exact. This slide contains the anesthesiology class of 2027's 2025-2026 estimated cost of attendance for non-resident students. Their tuition is charged at $1,162 per credit hour. Everything is the same except for the tuition amount and all of the processes mentioned previously for those resident students, such as granting permissions or authorizing permission for financial aid to pay all charges, receiving a refund, the credit hours, all of that is exactly the same. The only difference between resident and non-resident students is the cost of their tuition. The third and final key takeaway of this presentation is the partnership between the Financial Aid and Scholarships Office and you as the student. A big part of the FASO and student relationship requires students to be aware of their responsibilities surrounding their aid offers. We'll start with those responsibilities that are before accepting your aid. You want to make sure that you review your monthly expenses and build a budget. You can do this by reviewing previous month's spending and seeing where you can cut down on expenses. Again, we encourage you to only take out the aid that you need and to use our budgeting worksheets on our website for help. There are also a lot of good budgeting apps out there that are free to use, so feel free to utilize those if that works better for you. You should also review the offer letter carefully before accepting aid, because any time that you accept aid, it implies that you understand the terms and conditions of receiving and keeping that aid. While building your budget and before accepting aid, we encourage you to consider any other financial support that may be available to you. This includes, as I mentioned, whether you are not responsible for rent or mortgage for where you are living, if you are on another individual's health insurance plan or a cell phone plan, or if you can reduce the expenses related to food due to family support. This is going to help you reduce your overall borrowing as much as possible, therefore reducing how much you owe in the future and have to pay back. Be sure that you also review the distribution of aid. As I discussed, fall and spring are offered together with the funds split evenly between the two semesters. Summer aid will be offered separately as applicable and will be notated in UCD Access with SU or SUM in the title. Student responsibilities after accepting their aid include completing outstanding loan requirements. For those federal student loans, that means the entrance counseling and the master promissory note on studentaid.gov. We also request that you monitor your email and your bill or your student account regularly for updates. Avoid late in service fees by not assuming that aid was automatically paid out. We will notify you via email and your UCD Access to-do list if there are any outstanding requirements for your aid, so please be sure to check those and follow up as soon as possible to avoid a delayed disbursement of funds. Student responsibilities regarding keeping their aid include maintaining SAP requirements. Please monitor your email and your student account for any notification of SAP requirements not being met. Our office will send out a notification in the student's SAP warning semester wherein they will still be eligible for financial aid, but must meet their SAP requirements in all future semesters to continue receiving aid, or their SAP suspension semester in which they are no longer eligible for financial aid. We do offer SAP appeals, wherein a student on suspension can submit documentation and paperwork and a request to continue receiving aid. If approved, we will notify the student and they will receive aid for that semester. If not approved, unfortunately, it does mean that the student is ineligible for aid in that semester. Please also be aware of how withdrawing can impact your aid. Our office is legally obligated to complete a calculation called Return to Title IV, or R2T4. This is a calculation that determines how much Title IV, which is federal and state aid, was earned by the student and how much must be returned. This could result in a bill with the bursar's office for you to return aid funds, depending on what the calculation reveals. We completely understand how overwhelming financial aid can be because there are a lot of moving parts and a lot of things to keep track of. That is why we are here to help support you and all other students at the AMC campus. Our office offers many different types of support, which includes presentations for each program. We will host a presentation on or around orientation at the beginning of your program. We will also offer presentations around borrowing wisely and financial wellness sporadically throughout your program. And then at the end of the program, prior to graduation, we will host a loan repayment session. We also partner with outside agencies to host financial literacy sessions on campus that are typically lunch and learns. So not only do you get financial literacy tips and tricks and guidance, you also could get a free lunch, which will help with your budget. Our office can also offer individual advising support with students via walk-ins, Zoom, telephone, and email communications. This is where a student can meet or otherwise communicate with an advisor to discuss their unique situation. During this time, an advisor will answer questions and provide clarifying information about financial aid, as well as discuss the benefits of the financial aid options available to the student. We will also share tips on budgeting and maintaining aid eligibility. So please reach out to us anytime that you have a question, even if it's covered in this presentation or other documents. We would much rather you understand correctly how financial aid works than take a guess and be incorrect and end up having to owe more money than you should. Thank you so much for watching this Financial Aid and Scholarships Office presentation for the Fall 2026 Matriculation Anesthesiology Assistant students. Financial aid is a lot of information and has a lot of moving parts, especially with the upcoming changes in the One Big Beautiful Bill Act. So if you have any questions, please feel free to reach out to us. We are available for advising in person, via phone calls, via email, as well as currently through Zoom scheduled appointments. You can find our most up-to-date advising hours and that Zoom scheduling link on our website. And we also encourage you to keep in contact with us throughout your entire program. We would much rather help you shoulder the burden of the understanding of financial aid so that you can focus on your studies. We are here to help. Welcome to CU Anschutz.